Okay, so this is my second video for moms who are interested in trading. And the first video, I talked a little bit about Elliot Wave analysis. And I think it's really a foundational tool because you don't want to buy at the top. So Elliot Wave is not like magical recipe and there's big ranges within it. But if you follow Elliot Wave, it should help you beat most retail traders because you will avoid buying at the top and selling at the bottom. So it's just really like there's a bunch of different tools that I've used, and I want to share some of those tips in these videos. But the Elliot Wave is going to show you how price levels kind of follow a pattern, like a wave pattern that we also see in nature. And just as a reminder, I'm not a financial advisor. This is not financial advice. It's just a mom sharing tools that have worked for her. How do you know they've worked for me? Well, I'll just share like a little bit. So this is my rate of return in my individual account, and you can see how it compares to like these different indexes. My goal was just to beat the market. I was trying to save some money for college, retirement, just like play around, have a fun hobby. And I think I've definitely accomplished that. My first year, I was doing pretty decent. So I decided, hey, I'll open some custodial accounts for my kids in addition to this college account I opened for them. And so I started with like 503 for my first kiddo. I got, pretty good return on that one. Definitely beating the market with this account, definitely beating those college savings funds. And then my second kiddo, I played around. He's younger, so I tried some different strategies. Not doing quite as good, but still doing, I think, pretty good. Kind of solidifying my swing and Elliott trading strategies in that account. And you can see there's like that big dip from last year, which was when the VIX was super high. And now that the VIX is like, mellowing out, I think we have one last wave before we have our next sell-off. And so what tools do I use for Elliot Wave? Like, honestly, you don't have to be some kind of mathematician to be able to do Elliot Wave. It looks a little bit intimidating at first, but there's always awesome tools. One that you can use is Wave Basis Pro. I use this tool on the regular. There's a free tier. They give you like a trial where you can try like everything. And honestly, like if you could afford the $50 a month, it would be worth it. Definitely better than following any guru or paying for any Discord. But even if you have the free version, it's still giving you like tons of awesome information. And it kind of gives you little boxes if you zoom in, like, hey, this is the range of your price target. And so that's usually like the price target that I'm going to set. And this is just what it looks like. I also use TradingView for day trading. It has like really awesome trading tools. You can only use 2 indicators for free. That's why I use it for day trading. Sometimes I'll erase those indicators to put the Fibonacci levels in, so I can kind of like use that as well as the Wave Basis Pro to sort of check my Elliott Wave strategy. And so currently, where do I think we are? Well, based on this diagram and what I've been looking at, and this is just, I'm pretty new, so this is not financial advice, but I think we're currently just finishing up the corrective phase following the October 2024 high. As of this chart, I think that we're actually in wave 5 as of like the last day or two. The elevated VIX readings we saw in April 2025 when VIX crossed 75 are consistent with the wave C, low forming. So I've been scaling into NVIDIA. I started in like 168 and I just sold because we have some options expiring this Friday. It's not a triple witching, but there could be some volatility. I could lose some of my gains. And I don't know how strong this wave 5 is. I don't know how quick it's going to be, but I think we're getting towards the end, sometime between now and June, early June, late May. We'll be kind of finishing up that wave 5, and then we'll see what happens. I don't think there's going to be a really big sell-off until like a little bit later, but we'll have to see. I just sold my Marvel because it hit my MRVL, just hit my price target. For SPY, I was kind of looking for 696 to the 707 zone as my potential wave 5, And when you see that number, you're like, definitely want to get out of the market if you're swing trading. And so if you're a few counts off, that's fine. Everybody makes mistakes, even, and it's kind of like subjective, and it will also change from day to day depending on like the macro and stuff like that. So what is Elliott wave theory? So it's basically this idea of these impulsive waves. So you can see I have wave 1, a little full pullback on wave 2, and you can have these Fibonacci retracement levels over here. Then you have wave 2, the wave 3 pullback, and then wave 3 is the longest from wave 3 to wave 4. Then you have the corrective wave 4 pullback with these different Fibonacci retracement levels all the way to your target. And this is just the down here on the bottom, you can see that Fibonacci ties it all together. Each wave moves in ratios of these different levels. And what's really cool is I actually got this diagram from ChatGPT. You can use Chat and you can use Claude. It can do the wave counts for you. So, and you can actually, you have to put a chart in there and the current prices, because AI will always hallucinate and think like that the price is something totally different from what it actually is. So if you put in like the real chart and you're like, hey, I think we're in this wave, can you do these Fibonacci retracement levels on here? You also do it on your trading view to double check. So just kind of like a little helper to check the work that you're doing. So typically there's different patterns, but the main one I look at is 5 waves up, 3 waves down. In a bull market, prices usually move in 5 waves, 3 advancing waves separated by 2 pullbacks. Then after those 5 waves, you get the 3-wave corrective going down, which you can see labeled A, B, and C. I'll put like a more general picture up for you so you can kind of see it. And then this is really interesting. They move in proportions that follow the Fibonacci sequence, which I just talked about, those retracement levels. You've probably heard of the golden ratio, 1.618. That number shows up everywhere in nature. And it also shows up, interestingly, in these market waves, which is actually really cool. So each wave has a Fibonacci relationship to the waves around it. Wave 2 typically traces a specific percentage of wave 1. Wave 3 typically extends to a specific multiple of wave 1. And then once you know these ratios, you can kind of forecast the price and where it's going to go. And so you can see those different ratios right here. 50, 38, 38, 2. I feel like it usually goes towards the bottom in this current market. Like it doesn't usually go to just 50%. It's usually like a little bit deeper. But this is when you want to start looking at entering a position. And so again, this is the SPY, the conservative target, which I don't know, maybe it will only go to like 695 or something. But again, it's not a magical recipe because there are invalidation levels. So that means, okay, this wave count, this whole sequence is no longer valid. Like it's going to do something else. It's no longer bullish. The trend is going to reverse. So wave 1, so kind of just like talk a little bit about what these levels are. It's the first move. People typically aren't expecting it. So if you look at the current bull cycle that started in October 2022, this was the bear market bottom. SPY hit a low around 348, and that's where one of the current cycle began. Most people didn't believe the rally. The news was still pretty bad, but the market started to climb, and then wave 1 peaked around 457 in July of 2023. So you can have Elliott wave over a long time period, and you can have it over a short time period. I think it's good to look at it a little bit from both time periods so you know if what your larger trend is and what your micro trend is. And then wave 1 is basically your baseline. Every other Fibonacci calculation in the cycle starts there. So that 109 range became your measuring stick. And so you see the number go up again and again as you go through the waves. And wave 3 is the big money wave. Everyone talks about it. It's almost always the longest, usually the most powerful. The news starts to get positive here, but then it trips people out because like in wave 4, it goes down again and then people get scared again. And then it goes up and sometimes people start to chase right there at that wave 5. And you don't want to do that. You want to be like selling in that wave 5. Even if you sold in wave 4, like you have some pretty nice little profits there. So there are some Fibonacci rules though you want to keep in mind. For wave 3, it typically extends at least 161.8% of wave 1's range, sometimes more than 200%. So if you take the 109 wave range and multiply it by 1.618, you would get 176. Add that to the wave 2 low of 410, and you get a wave 3 target of around 586. So SPY's rally from the October 2023 pushed towards that 580-90 range, which was in line with the 1.618 Fibonacci extension. So really, like, this math is beautiful. And it doesn't work on like super small, tiny microcaps. Like I wouldn't use it on like a penny stock. Those are very catalyst driven. But on like any of your like Mag 7 bigger stocks, like the things you want to have large positions in, it's going to work fairly well. Like, and it will give you a range. Like usually like there's a box on that Wave Basis Pro. It can be like a big range, like from 225 to 280. It seems big, but then the target is like 500 to 1,000 or something. So you're going to make money if you can just be patient and like as long as you have conviction and a little bit of time. So wave 3 is where you can most aggressively add to your positions. You can sell at wave 5. You don't necessarily want to sell in wave 4 because then you might be chasing, you might move it gets a little sloppy. So I would just hold through the wave 5 if you can. And that's the final push in the sell zone. And so a good time to buy is when everybody is like super fearful. Like when the VIX is really high, but then you want to sell when everybody's like super ecstatic and you're seeing those wave 5 targets. And even if you didn't become like super excellent at Elliot Wave, there's a ton of analysts posting about SPY. So you can kind of just look and be like, hey, when SPY hits this, I'm probably going to exit my swing positions. Obviously, I recommend having like an account where you just like hold long term. You buy when the VIX is high, you buy in those super red days. You just hold for a really long time so you don't miss any of those big moves. I also think it helps prevent FOMO. So if I'm going to sell in wave 5, probably at the conservative level, maybe even a little bit below that, and take my profits in my swing account, I'm not like having FOMO because I also have the stock in my long account. But again, that's just for the stocks that you have like really high conviction with. And then, so I think we're getting into wave 5. We're either finishing up wave 4, starting wave 5. I'm not sure. So like Marvel, I already hit my target. I sold it earlier this week. Nvidia, I sold it because I wasn't sure if we were where we were in wave 4. But I think before the end of wave 5, it will hit in the 220s. And then I also really like Micron MU. And I think it could go up to the 500s, but then I think it's going to have a pretty hard retracement. The last time I mapped it, it was like 225 to 280, 290 as a wave 1. So the correction after wave 5, that's the gift. That's when you want to buy. So this is my chart of NVIDIA. So you have over here the Wave Basis Pro. There's 3 bearish alternate counts. It's 70 to 79%, but a bullish diagonal 4. You can see over here at the 90.7%. So it looks like wave 4 was completing when I bought at 168, and then wave 5 is ahead. I think we're in wave 5. I don't know how powerful it's going to be with this macro, war, Iran, oil, inflation, all these things happening. So I just kind of sold it, and I'm looking to re-enter. You can see there's like a 140s. And a 160, so I'm looking to re-enter into the wave 1 for NVIDIA. So I'm not entering any time in the next couple of days. I also really like to use this chart called Pro Real Time, and the indicators I use are the volume. It's just good to see what the volume looks like. The Chaikin money flow, which is like your institutional buying, which I mostly see selling over here. So that wasn't like super, that's why I kind of sold a little early. I wasn't super convinced. And then the CCI, which is like towards the top, it's overbought. Towards the bottom, it's oversold. I did see it being oversold when I bought over here at this like most recent bottom. And then the MACD, I like to see it curl. It's not like a super convincing curl because those candles are still red. And so that's why I took my profits today a little early. Plus, I know options are expiring on Friday, and so I'm a little nervous about that. And then Marvel, this was another beautiful chart. And this was a few days ago before I hit my price target. So I bought around here, like in the 80s. You could see that there was like a trend. The CCI, it was a little bit oversold. The MACD, it was kind of crossing. Over here, you can see the linear regression, the color coding. It kind of started to change color around there to be green and make it and go above that MACD or above this. The EMA, the 200, which is what I like to moving average, the 200 moving average. Sorry, I like to use that the 200 moving average. And so just some really good indicators. And this is a free tool as well. You can put as many indicators on as you want. I highly recommend it. And I really recommend those indicators to use alongside Elliott Wave to determine entering a position. And this was Micron. And so obviously, like, I got out of it towards this top. It's like multiple tops. I think it can have like a really big like super cycle wave over here, but I wanted to come back down, and I actually spotted here 247 would really be where I would probably start a position. I would start looking at it under 300, but I think it's going to go below that. Like, I don't know. We'll see, but that's really what I'm looking for. But 225 to 290, and then sometimes 300 to 320, depending on the day, because the counts do change, is what I see in my Wave Basis Pro. But it is not time to buy it now. Now would be chasing. Now is the FOMO. So I'm just watching this one to enter again. USAS is my Wave 4 setup. I did enter at 526 because even though not everything confirmed across the board, I thought I could get at least a bounce. Oh, and this is what I'm talking about, how I get these little gray boxes of potential like price targets. And so this wave probably won't be super high, so I'll probably take most of my profits about right now. It's like in this box, it's almost in this box zone. But I could see the MACD look like it wanted to curl, and I bought when the CCI was down here and kind of making a pivot. We're seeing some selling here by institutions on the Chaikin money flow. So I just think, I do have a higher price target on this on longer time frames, but that would definitely require some patience. So I'm going to be selling my swing account position pretty soon in this box. And then I have a longer term hold I'm probably going to hold till like 16 bucks, maybe even some a little bit longer term. So again, this is just like a little chart of when to buy and when to sell. So you buy when there's some fear, the VIX is peaking, maybe when it's starting to go down, and then you sell at the opposite peak. You sell at the Wave 5 on Elliott Wave. So two different metrics, but they kind of work together. They complement each other really well. You get this FOMO. That's when you have all the greed coming into the market, and that's kind of your signal, like, hey, let's get out of our positions and wait for the Wave 1 entry for everything to settle again. And then this is like the psychology map. Like, part of being a good investor or trader is understanding market psychology. So you have your buy zone when people are in fear, and then there's like the skepticism in Wave 2, and then everybody gets like all this optimism in Wave 3. And some people buy up here and they're still going to make some profits as long as they sell in Wave 5, and they're holding it for a shorter time period, which probably has some advantages. And that's when you sell. And then you have like denial, false hope, and then panic as you see, it's just going back to where it needs to go, basically like a healthy correction. And it might be really sharp. Like, I think that the economic data is, I don't know, I want to say mixed, but the possibility of stagflation does look to be there. So I would just be careful in the current market environment. There'll be some opportunities for sure. There's also some triple witching dates I wanted to share with you. And so this is June 19th, September 18th, and December 18th. This is where stock options, stock index futures, and stock index options all expire simultaneously. So it creates a lot of volatility. And if there's downward pressure, like I'll show you how to look at the gamma exposure. But if the GEX is also bearish that day, there's a good chance like there's going to be some sort of like sell-off and whatnot. We do have some options expiring this Friday, which is why I sold most of my positions today. In part also because we just had like pretty big recovery. I feel like the market needs to at least breathe and digest some of its gains. And so I'll maybe enter back in on Friday depending on what it looks like. I don't know for sure, but I'm definitely going to be out before June 19th when those options expire on that triple witching day, and probably waiting until September 18th maybe to consider entering back into some swing positions. I'm a mom. I like to take the summer off, hang out with my kids, so I don't really want to be watching the market when we're on summer vacation. So I want to leave you with this. This is the closing. When I first heard about Elliot Wave and Fibonacci, I thought it was way too advanced. I was like, I'm terrible at math, numbers, ratios, wave counts. Sounds like something for professionals, but the truth is just a framework for understanding how human emotions, fear and greed, move through the market in predictable patterns. And so it just gives you this framework or this map. It's not perfect. Wave counts get revised, targets shift, but the rough direction is way better than just responding emotionally. And so use your tools, your Wave Basis Pro, that gives you the wave count, trading view for those Fibonacci levels, the VIX is a fear gauge, and then just be patient. The market's going to ebb and flow, but I'll talk about in another video some of the stocks that I'm really bullish on that I'm going to be looking at. And again, the only stock I really have an entry in right now is USAS from 527. And I'm going to be scaling out of that pretty soon. And I have a couple other ones, but I wouldn't enter them right now. So I'll talk about them later.